It's no secret that the price of gold has been on a tear for what has now been several months. The yellow metal at the time of recording is up just shy of 40% over the last 12 months, which translates to gains of over $1,000 an ounce across that time frame. While that is obviously having an impact on the profitability of producers, it's also having a major impact on the economics of development stage projects. Even the smaller scale projects are now hitting the markets with massive numbers, which is simply a result of this massive run. Case in point, Fortune Bay's Goldfields project in Saskatchewan, which, despite forecasted average annual gold production of just 64,000 ounces, at current spot prices has a net present value of over $1.2 billion and a payback period of sub 1 year. Let's dive in. Yes, you heard that right. Even small projects now have wild economics in this gold environment. I'm not sure if that's a sign of a near-term top for gold or a sign of just how bad the value of the dollar has deteriorated post-pandemic, but in any case, it's a positive for us investors. Fortune Bay is the latest name to hit the market with a revised economic study for a project that they've blown the dust off of amid rocking gold prices. This is a particularly bad case of that dust being blown off, with Fortune's Goldfields project actually going through the process of completing a provincially approved environmental impact statement back in 2008 for a 5,000 ton per day open pit operation. So they're a bit ahead of peers in the permitting department, to say the least. That permitting scenario, however, puts Goldfields on an accelerated path to production. The reworked mine plan now calls for a sub 5,000 ton per day operation to ensure the operation remains under provincial and not federal regulations, while existing infrastructure on site and the past producing status of the project are expected to further assist in speeding up the timeline to production. With all that being said, let's take a deeper look at what exactly is being proposed here. All right, Fortune Bay has outlined an operation here with a 14-year life of mine at the Goldfields project, which is found 13 kilometers to the south of Uranium City in far north Saskatchewan. The operation aims to mine both the Box and Athona gold deposits, with the Box deposit previously being the focus of a small-scale underground mine that produced 64,000 ounces of gold from 1939 through to 1942. The latest iteration of the mine, however, will be open pit, with a strip ratio of 3-to-1. Mining here will be of a conventional nature with drilling, blasting, load and haul methods. The current mine plan calls for phased pushbacks, which allows for higher grade feed ore to be prioritized early on to reduce the payback period. The intent here, obviously, is to recover ounces from the current mineral resource estimate, which right now suggests that the Box deposit has 734,000 ounces in the indicated category at 1.4 grams per ton gold, alongside 114,000 ounces at 1 gram per ton in the inferred category. The Athona deposit, meanwhile, has indicated resources of 255,000 ounces at 1 gram per ton, as well as inferred resources of 100,000 ounces at 0.8 grams per ton gold. On the processing side of things, Fortune Bay intends to use whole ore leaching with gravity recovery and carbon in pulp, which is based on test work completed back in 2015. Processing capacity is pegged at 4,950 tons per day, which will keep them under federal permitting requirements that kick in at 5,000 tons a day, with average mill head grades of 1.2 grams per ton. Gold recoveries of 95.9% are expected at Box, while recoveries at Athona will slightly be lower at 93.5%. That recovery and production mix is expected to result in average annual production of 64,000 ounces of gold in the form of doré. However, the first 4 years of mine life will see the bulk of production at an average annual rate of 99,000 ounces of gold per year. Moving to the dollar side of the study here, initial capital is pegged at 301 million Canadian dollars, which includes 51 million in contingencies. While some infrastructure is already on site, including road access to Uranium City and an inactive large power line, there are still some things that need to be built, which includes a tailings storage facility with a capacity of 22 million tons, which will be built over 2 phases, waste rock storage facilities, and infrastructure for a fresh water supply from the nearby Lake Athabasca. Sustaining capital, meanwhile, is pegged at 142 million over the life of mine, plus closure costs of an estimated 15 million. In terms of per ounce metrics, cash costs per ounce here are estimated at $1,207 US, while all-in sustaining costs are estimated at $1,330 per ounce, which as of late amounts to being on the lower side of the cost curve among producer peers. As for the economics of the project, in the base case scenario at $2,600 gold, the Goldfields project is estimated to have a net present value of $610 million and an IRR of 44%, while payback sits at 1.7 years. At spot prices, which just days ago at the time of release was $36.50 an ounce of gold, that NPV rises to $1.25 billion, while the IRR jumps to 74.2%, and the payback period falls to just under 1 year, all of which is based on a 5% discount rate. So where does Fortune Bay go from here? Well, they plan to move forward with a pre-feasibility study for the project, with work already underway on a waste rock characterization study for that PFS, while planning is underway for further de-risking. Of course, they also intend to conduct a small-scale drill program of up to 3,000 meters to further test the potential here beyond the current mine plan. As for permitting, some changes need to be made to current permits to reflect the new mine plan, with baseline studies underway currently to support regulatory engagement next year. Initial project development meetings, meanwhile, are to begin locally in the fourth quarter of this year. But there's also another option for Fortune Bay here, which is an accelerated production case using on-site concentrate production. That EIS that is already in place allows for fast-tracked production via a lower capex route, which would see higher grade concentrates produced with production then to take a staged approach, beginning with initial gravity and sulfide concentrate production to reduce upfront capital requirements, which would cut development timelines and advance things to production under the existing permit framework. So that opportunity is also to be evaluated by Fortune Bay as part of the next steps they take. SGS test work that is currently in progress will allow for that option to be sufficiently evaluated, after which Fortune Bay can make an educated go-forward decision. All right, so let's wrap it up. In this gold environment, we're going to see the dust blown off of plenty of formerly proposed projects. In the case of Goldfields, it's been 17 years since serious development work was seemingly done on the project. But honestly, that's not really a bad thing. The economics here are great. And if these projects have any form of permitting done, it can mean drastically reduced timelines to production, which is a win for investors and local communities. Now it's just a matter of these companies actually electing to stay the course and push the projects past the 1 yard line and into production. All right, everybody, thanks for watching. As always, if there's stories you want us to cover, please let us know in the comments section. If you want more mining content, check out our website over at thedeepdive.ca. And if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.